Today's financial market update. The most important market insights you need to know. Market sentiment is bearish. Market is declining across major indices. Index performance: S&P 500 at -1.31%, Dow Jones at -0.96%, Nasdaq at -1.5%, Russell 2000 at -2.29%. The stock market sentiment is cautiously bullish despite recent downturns and rising volatility in select sectors. Investors should interpret the mixed market signals as a sign of underlying volatility, especially in sectors with fluctuating fundamentals. Consider increasing allocations to health sector stocks, particularly high-performing ones like PRSO, to capitalize on their growth momentum. Brent oil prices are projected to exceed $100 per barrel, driven by potential storage constraints and supply disruptions. Higher oil prices typically correlate with increased consumer and business costs, which can dampen economic growth and spending. Consider reallocating investments into energy stocks, which may benefit from rising oil prices despite the associated market risks. Civista Bank shares reported a net income of $46.2 million with an earnings per share EPS of $2.64. Strong earnings from companies like JP Chase signal robust financial health, suggesting a resilient economy that can be attractive for investors. Consider increasing exposure to financial stocks like JP Chase, which are showcasing strong earnings and revenue growth. The U.S. economy is currently experiencing an affordability crisis, leading to uneven consumer spending habits across different demographics. The affordability crisis indicates that many consumers are prioritizing essential spending, which could lead to reduced demand for non-essential goods and services. Investors should consider reallocating funds into defensive sectors such as utilities and consumer staples, which typically perform better during economic downturns. The U.S. economy is currently displaying 3 tiers of consumer behavior due to an ongoing affordability crisis. The divergence in consumer behavior indicates varying spending capabilities, which may lead to uneven economic growth and potential recession risks. Consider diversifying portfolios to include energy stocks, as rising prices may benefit certain sectors despite overall economic uncertainty. Brent oil prices are approaching $100 per barrel, driven by geopolitical tensions and supply disruptions in the Gulf region. The surge in Brent oil prices indicates potential inflation risks, impacting both consumers and businesses across various sectors, especially energy and transportation. Consider increasing exposure to CF Industries, as rising nitrogen prices could lead to favorable returns in the agricultural sector. The Reserve Bank of India, RBI, has requested banks to disclose client information on foreign exchange transactions. The RBI's move indicates a heightened regulatory focus on foreign exchange activities, suggesting increased scrutiny of currency market operations. Consider diversifying your portfolio by including commodities like gold, which typically perform well during times of geopolitical conflict. President Claudia Sheinbaum is advocating for Coca-Cola to increase domestic cane sugar usage to bolster Mexico's agricultural sector. Encouraging domestic sugar use indicates potential regulatory changes which could affect Coca-Cola's operational costs and supply chain dynamics in Mexico. Consider diversifying into agricultural stocks that may benefit from increased domestic production initiatives, such as those tied to sugar or related commodities. Geopolitical tensions, particularly in the Middle East, are driving oil prices upwards, potentially exceeding $100 per barrel soon. Rising oil prices could signal inflationary pressures affecting consumer spending and broader economic growth, which investors should monitor closely. Consider energy stocks with exposure to rising oil prices, as they could benefit from increased revenues and improved profit margins. Oil production is declining due to ongoing geopolitical tensions, particularly in the Middle East, impacting global supply. The decline in oil production highlights instability in energy markets, which can lead to increased operational costs for real estate developers and investors. Consider diversifying investments into energy-efficient properties, as rising energy costs may drive demand for sustainable living options in the long term. JP Morgan predicts Brent oil prices will exceed $100 per barrel due to ongoing geopolitical tensions affecting supply chains. The anticipated rise in oil prices suggests potential inflationary pressures, which could affect consumer spending and overall economic growth. Consider increasing allocations to energy-focused private equity funds that can capitalize on rising oil prices and supply chain disruptions. State Street has partnered with New Data to enhance its data intelligence capabilities, indicating a strong focus on technology integration. The partnership between State Street and New Data reflects a broader trend of financial institutions investing in AI to gain a competitive edge. Consider investing in firms like State Street and New Data that are enhancing their AI capabilities, as they may yield strong returns long-term. Solana ETFs are attracting stronger investment flows than Bitcoin, despite SOL experiencing a significant price drop recently. The stronger flows into Solana ETFs suggest growing confidence in alternative digital assets, potentially diversifying investment strategies beyond Bitcoin. Consider allocating a portion of your portfolio to Solana ETFs, as they may provide unique growth opportunities amidst current volatility. Enphase Energy is expanding its operations into commercial and grid solutions, enhancing its clean energy portfolio for broader market reach. The expansion of companies like Enphase Energy signals a growing market demand for integrated clean energy solutions, potentially leading to higher revenues. Consider investing in Enphase Energy, as its diversification into commercial solutions may yield strong growth opportunities in the evolving energy sector. Thank you for watching FERPA, your financial Sherpa.